afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. Quite another volatile session ahead of non-farm payroll. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yeah, quite a bit of volatility. The market stalled during Fed Chair Powell's press conference yesterday and then began selling off towards the end of it. It's sort of aligned with him talking about no rate cuts later this year. That's been typical where you see the selling kind of come in when he's denied that. I did talk about that in yesterday's Morning Express, or yesterday's Midday Market Minute, so go check it out. Really what we're seeing here today is the continuation of selling last night after the Pac West news, and then some attempts to sell into past support after the Western Alliance news, which was then denied. Equity markets are holding pretty constructive here, given the continued news bashing here of these regional banks and one falling after another. But overall, 40.70 to 40.60 in the S&P major three-star support has been big there. We have a lot of support below there as well. And then the NASDAQ, 12,980 to 13,000 has been our major three-star support, and that held today so far. I mean, we still got 2 more hours of trading to go, but I think this is very constructive to see ahead of non-farm payroll tomorrow, and especially given the way things looked at 5 p.m. Central Time yesterday when things opened up. You had the equity markets much lower. You had gold surging. But where we are now, the situation doesn't look so bad. It may be more of wait and see what non-farm payroll brings. Right now, though, we're seeing the CME's FedWatch tool show about a 10% probability that the Fed now cuts the 25 basis points that they hiked yesterday, and they'll cut that at their mid-June meeting. So it's very interesting to see that being priced in already. You look at non-farm payroll tomorrow. Wage growth is going to be crucial. 0.3 month over month is what they're looking for. 4.2% year over year. I think it's 180,000 jobs created is what the expectation is. We've seen Goldman Sachs after that ADP number raise their expectation to I think 240,000. So if we see job growth continue to come in, it's not a bad thing. It shouldn't hurt the market in general, but it's that wage growth. Does that wage growth continue to really accelerate? And then the unemployment rate, the 3.6% is what they're looking for, an uptick of 0.1. If that unemployment rate can uptick regardless of job growth beating, I think that's going to be taken as a little bit of Goldilocks. I mean, listen, I'm not bearish here, and I think that the fact that the bearish equity market that is, and I think the fact that everybody is wanting to be bearish, I think that gets me excited a little bit. Now, I am a realist and I am nimble, and that gives me the ability to sit here and say that I want to be bullish. But obviously, if we get bad news, if 4,000 breaks, then I think that you got to be negative in at least the near term in that. And there's always going to be just sort of a gauntlet of news to work through here. I mean, even just today at ECB's the ECB policy meeting, they hiked 25 basis points here. Today, we started seeing some weakness in the euro and strength in the dollar during Lagarde's press conference. That has sort of dissipated. We had jobless claims come in a little higher than expected, but the non-farm productivity came in lower and labor costs came in higher. There's just always a little gauntlet of news to always sort of, kind of steer through. And I think today's news is see the market after that non-farm productivity numbers. It is a lagging number, but I think to steer through all this and then as well, the regional bank news, and to see the market kind of work higher here, at least for this part of the afternoon, is a positive. Now, let's move on to crude oil. That was something to watch last night at 5 p.m. Central Time when they reopened. We traded down to a 63 handle in a split second. I highlighted the volume. Is this a capitulation? I'm really watching the volume as we get through the end of the week. We're moving higher right now. Back into sort of 69 area. Gasoline starting to perk up a little bit too. It's going to be crucial to see how these contracts in the energy space finish out the week and what type of volume do we get. I'm upbeat at this level, at least until, unless we close ugly tomorrow, but I'm at least upbeat to see this thing try to stage a rebound. And then finally, looking at gold and silver. Gold did test 2085 on the reopen last night. It dissipated. It's back down here battling around 2060. Set up for a constructive finish to the week. Again, it's all but non-farm payroll. That report comes in strong. We're likely to see gold give up a lot of its gains this week, and what that would do is set a big tail on the weekly candle, and that would be ugly for a triple top area. So at least in the near term, bat gold down a bit. Silver right at 26, right at those highs that we saw a couple weeks ago. So a lot here to digest as we go into tomorrow's non-farm payroll report. Again, a soft report, something that shows inline job growth, an uptick in unemployment, not so hot wage growth. I mean, that could be a catalyst really to get gold and silver going because they don't need much. They just don't want to see a hot report tomorrow. But our team's here to help you, so don't hesitate to reach out. 312-278-0500. And remember, futures trading involves substantial risk of loss. It is not suitable for all investors.